welcome to this Bell Direct weekly update. I'm Julia Lee, an equity strategist with Bell Direct. And this week, of course, earnings season has kicked off for the Australian share market. The market up by 0.4%. Particularly in focus has been Commonwealth Bank. It's due out with its full year numbers next Wednesday. However, with the possibility of a large fine due to the facilitation of money laundering, that stock has been under pressure, pulling down the financial sector. We have seen, though, a good performance by the utilities and the industrial space. One of the most interesting areas coming into reporting season is the retail space. The possibility of Amazon moving into the Australian share market sees a sector that's under pressure coming under even more pressure. The high number of short positions reflecting this, where we see Myer with 16.5% of its stock shorted, JB Hi-Fi with 13.8%, Retail Food Group with 12.3%, Metcash with 12.3%. These stocks are all in the top 10 most shorted stocks on the Australian share market. Just outside of the top 10 is Domino's with 11.6% shorted and Harvey Norman with 10.9% of its stock shorted. This means, of course, there's a high number of bets that the stock prices of these stocks will continue to fall. So given the cloud around retail at the moment, it's interesting to start off with this note from Deutsche Bank, looking at which stocks may have upside during reporting season, and it picks Harvey Norman, Woolworths, as well as JB Hi-Fi. Harvey Norman and JB Hi-Fi are expected to benefit from the wealth effect of higher housing prices, while Woolworths does seem to be making ground on Coles, so sees that as an outperformer there. On the flip side, that of course means Wesfarmers has downside risks because it is the owner of Coles, and Domino's, it calls into question the quality of its results, especially the European part of its business. Staying with Deutsche Bank and looking at the property space, and its pick in the property sector is Viva. Viva has around about a 20% upside according to Deutsche Bank, defensive earnings, a lower management expense ratio, and a possibility of an uplift from revaluation of its assets upwards. Viva is a company or a REIT which owns petrol stations, so an interesting one there. It has a hold though on Mirvac as well as Stockland. Both of these companies of course have exposure to that residential space. It does see a record amount of settlements for the FY17 year, but the key, it says, is the next financial year, FY18, so the outlook will be key for these stocks. It also has a hold on Goodman Group, which it thinks is benefiting from the move towards internet sales and internet retail, and it also has a hold on GPT. Staying with Deutsche Bank and looking at some of the building material stocks, it sees upside for Boral, a hold for Adelaide Brighton, but some risks for Reliance Worldwide as well as James Hardie. Of course, a lot of these building material stocks have high exposure to currency, and with the Aussie dollar moving upwards, Macquarie is focusing in on those US dollar earners. It thinks that the market has been a little bit too hurried in downgrading some of these stocks in terms of stock price performance. Those US dollar earners it sees as oversold include Aristocrat Leisure, Brambles, Intertech Pivot, James Hardie, as well as QBE Insurance. Of course, a rising Aussie dollar is good news for Qantas, which is seen as a beneficiary from that rising Aussie dollar. Staying with Macquarie and looking at a preview of the Diggers and Dealers Conference, and staying with the gold stocks for the time being, its preferred stocks in that gold space include Evolution Mining, Saracen, as well as St. Barbara Mines. If you're looking at a gold developer, it prefers Stacadian, DCN, and if you're looking at base metals, its preferred stock in that space is Metals X. Lithium, of course, is still hot, and it prefers Galaxy as well as Pilbara, PLS. Looking at Goldman Sachs, and it's looking at metals and mining, and given the strength in the iron ore price this week, we've seen an upgrade to its expectations around iron ore prices this year as well as next year. This year upgrading the price by 6% and next year by 12%. It's also increased its expectations on the Aussie dollar to 76 cents in both years, and that means it's upgraded the 12-month target price for Fortescue to $4.75 from $4 previously, as well as Iluka to $9 from $8 previously. Of course, next week is going to be another big week with reporting season notching up a gear. On Monday, though, it's going to be pretty quiet with a bank holiday. On Tuesday, we'll be watching IOOF as well as Transurban. Wednesday is going to be huge with Commonwealth Bank coming out with its full year numbers. We'll also be watching car sales. On Thursday, it's AGL Energy as well as AMP and Aurora. And on Friday, we'll be watching the NAB quarterly, and we'll also be watching the REA results, real estate results. So altogether, it's going to be another huge week. No doubt some big movements from some of those earners and those full year numbers, but we're going to see a quiet start to the week with that bank holiday on Monday. The market's open, but we will see a lot of the market on holidays.